Hey, my name's Jeff Nicholson and welcome to my YouTube channel. In this video, I want to talk about a major lender that has cut interest rates, mortgage rates significantly. We're going to talk about why that's happened and are other lenders likely to follow suit as well, because there's a lot going on in the market that indicates that the Bank of England is not looking likely to cut rates. The Federal Reserve are not looking likely to cut rates anytime soon. And the amount of times they're going to cut rates this year is going to drop off from what expectations were only as recent as December. So if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit the bell notification. If you have a look around this video, you'll see we're so close to 40,000 subscribers now. So do subscribe and let's get some more views on this video by smashing like, tickling like, doing something to that like button, and then share the video and WhatsApp it, email it or Facebook it to a friend that wants to know what's going on in the market. So a major lender has cut rates, but first, why have we got to this point? Well, the Bank of England had their meeting this week and they've indicated probably this year they're going to cut rates around 2 times. We've also got the markets agreeing with that somewhat. They believe that the bank will cut 3 times, so not much more. And in America, they're saying that they're likely to cut around 2 times. So there's not lots of momentum there in bringing interest rates down. Now, next week, we've got the spring statement from Rachel Reeves, and it's not expected to be good news. It's expecting government spending on benefits is likely to be cut and no real incentives to get the economy going again. No tax cuts or VAT cuts or anything that they've done previously to really get this economy going. So we're kind of in it on our own. The property market is slowing down now. The start of the year, the first 3 quarters, January, February, March, it's looking like around 500,000 properties will have been sold in that time once the dust settles. And a lot of those deals got brought forward because people wanted to take advantage of the stamp duty increase, which happens in April. The second, the last 75% of the year, we're only expecting another 500,000 properties to be sold in total. So that shows a marked decline in business, and agents, solicitors and lenders are starting to feel that this is really going to slow down. So this happened last year. The market started off very slow, and what lenders did to get the market moving even before the Bank of England cut was to cut rates to stimulate the market. And who's done that now? We're looking at Nationwide, and this is good because Nationwide are one of the most competitive lenders in the market. When we do roundup videos, they're often one of the cheapest lenders that you get out there, and that's really positive to see when we get that. And so they've got a number of brands. They've got the Nationwide, they've got Virgin Money, and they've got the Mortgage Works as well. This is just under the Nationwide brand, which is for residential purchases. Now, the goal of this is to get the first-time buyer market moving. So these deals are focused on first-time buyers. So maybe you own a property and you're a buy-to-let investor or something along those lines. You're thinking, well, I'm not a first-time buyer. Well, this will impact you a bit because this will stabilize some prices and get that part of the market moving. And that is important, that all areas of the market are moving a little bit faster. So what are they saying? Well, they're saying they're going to cut by a fair bit, 0.26%. And these are cuts on deals with low deposits. So what are we talking about? We're talking about deals that fall into 80% to 95% loan to value. So you could get one of these deals with as little as a 5% deposit. Now, the reason they're doing this is the stamp duty increase on April 1st hits first-time buyers probably the hardest. So they're bringing the threshold where you don't pay stamp duty down from £425,000 all the way down to £300,000. That's a big drop, and it's going to be a big increase in cost for first-time buyers. It's strange that the government is doing this because they always talk about supporting first-time buyers, getting people on the property ladder, but they're still doing this. I don't really get it. Could it change in a spring statement? Maybe. It's not been leaked or talked about at this point. So this is to get that end of the market moving. And what rates are we looking at? Well, they're doing it on various deals, on 2-year deals, 3-year deals, and 5-year deals as well. So that's good. It's on a big spread here. And the rates start on this at 4.99%. Which isn't bad, because I know when we talk about rates, there are some rates under 4%, but they're not on 5% deposit. They're on 40% deposits. So this is a good rate if you've got a small deposit, because a lot of this risk is with the Nationwide then. Some people feel the property market could go down. If it goes down 10% and you go into negative equity and you give the keys back and say, I can't afford it, then they've got a property that they'll struggle to sell, and they'll probably sell it at a 20% loss. So this means the risk is more on their side. So the rate is 4.99%, and that works for deals with as little as a 5% deposit, which is good. And the fees are good on this deal as well. That's important, because some of these deals, when we talk about lower rates, have crazy fees like 2%, 3%, 5%, or even some buy-to-let deals have 6% fees, which is mental. The fees on this are $9.99. Now, some of you will say, well, I want lower fees or cash back. Yeah, you used to get that kind of stuff, but not in this market at the moment. It's not really there. But this is a good positive start from Nationwide. Look, rates didn't drop, but they've still started to cut some rates. Do I think other lenders will do the same? Yes. I think that you're going to see lenders particularly focusing on this first-time buyer segment of the market. They've got a bit more margin here themselves. They're at nearly 5%, whereas they have deals under 4% when you've got a big deposit. So they do have some margin there, and they are making more money on these deals if people don't default and complete their mortgage. But they want to get that end of the market moving. What's also interesting here, and if you think about this stamp duty stuff, Labour's saying they're going to build 1.5 million houses. Now, in order for that to happen, you need home builders to get on board with that. Wimpy and all those sorts of companies need to get on board and say, yeah, we want to do that. But if you're making it more expensive for a first-time buyer to buy that property, they're the people that often buy these new build properties in these estates. And that doesn't make sense to me. The government is saying, yeah, build, 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 we'll make it easier for you. But the builders are going to look at this and say, well, actually, the stamp duty increase isn't really going to support that. And maybe we'll sit out and see what happens in the market. Anyway, Nationwide have cut. Who do you think it's going to do next? Do comment on all the videos, even if it's just to say hi. A lot of you did that on the last video, so thank you for that. That helps with the engagement. Do smash like, do subscribe, and check out all the other content as well on the channel, including this video right here.